Hi, everyone. This is Tony Nash with Complete Intelligence. Thanks for joining us for another quick hit. We're joined today by Patrick Haan with GasBuddy. Patrick, thanks so much for joining us. Can you tell us a little bit about what GasBuddy does and what you do there?
Well, thanks for having me, Tony. GasBuddy helps motorists save at the pump. We show motorists low gas prices across North America and down under in Australia. We even have a payments card that can sign up for to reduce their cost even further. About me, I've been with GasBuddy now for over a decade, basically helping our millions of users understand what goes into what they're paying at the pump and to understand how complex issues can influence their annual fuel bill and basically write blogs and tell motorists where gas prices are headed to save them even more.
That's perfect. And Patrick, it's a great product. I follow you on Twitter. I'm always interested in what you have to say. And it's weekly. It's in the middle of the week, and there's a lot of information about what's happening, kind of coming out of refineries as well. So I'm really interested to see hear what you have to say today. So Patrick, I was following you particularly in the last couple of weeks, going into the U.S. Labor Day weekend in early September, and then coming out of it. It seemed to me that consumption going into Labor Day seemed pretty strong. But coming out of it, it seemed like things really fell off, even on an annualized basis. Mm-hmm. Can you really talk us through what is that telling you, if anything meaningful? And is that telling you anything about the recovery from COVID, the consumption recovery?
Well, at least so far, we're kind of just entering this post-summer time of year that we really get a good idea of where we're going. And obviously, like you said, COVID-19 has really influenced every angle of what's normal for this time of year. What's normal is that demand for gasoline typically drops off notably. Kids are back in school, vacations are done, Americans are staying closer to home. But this year, a lot of what we're seeing in the media, the current events, headlines are playing into how Americans are feeling. And of course, that plays into where they go, how often they do. And so all of this is really factored in and probably one of the top economic indicators of what to expect. And so far here, in the week after Labor Day, we did see a nice run up to Labor Day. I think it was probably one of the best summer holidays, which gave us some glimmer of optimism. But now kind of we're coming down from the sugar crash, and now we are starting to see demand fall off. And where we go from here, I think we're kind of at a turning point. Will we see demand continue to kind of plunge, or will we start to see a little bit more optimism? I think obviously a vaccine would be the holy grail. But for now, really, we're kind of looking at seasonal trends that may be enhanced by kind of a lot of the restrictions motorists are contending with state by state.
Okay. I noticed next to my office is a commuter lot. Okay. And that commuter lot has been closed. We're outside of Houston, so people get on a bus to go into downtown Houston for work. That's been closed since February. Yesterday, I noticed they're mowing the lawn, they're getting it ready to reopen, these sorts of things. How much of an impact are those commuters who are driving, who would normally say bus into a downtown? Is that having an impact on the consumption and on the demand, or is it pretty marginal at this point?
Well, at this point, we've seen a lot of demand come back. We were at one point down 55% in March or April as basically everyone stayed home. Now we have rebounded. We're still down about 15 to 20% compared to last year, but it's that last 15% or so that's probably going to take more than a year, maybe 2 years to fully come back as businesses slowly reopen. So I think that's a really good benchmark of how quickly that last 15% in demand is going to take. And I think in this case, it's going to take quite a long time for people to be comfortable getting on mass transit. I have the same thing here in Chicago. I was recently down in Northwest Indiana. There's a lot of commuters that come up from Indiana during the day. And again, a massive parking lot. Satellite imagery shows that parking lot filled for the last 10 years consistently. Suddenly it's empty. So I don't think that, given some of the big businesses, they're not really talking about getting a lot of people back into the offices by the end of the year. I think all the focus really is going to be on early next year, or if there's a major disruption like a vaccine that would cause businesses to move their timelines up. But for now, I think when it comes to gasoline, distillates, even jet fuel, it looks rather bleak.
Yeah, I think so. And I think we're getting to that point of the year. Even if there was a vaccine tomorrow, I don't know if people would necessarily call everyone back before the end of the year. It just seems like we're getting into a really awkward time where it's hard to, tell people to come back. Is that the sense you get as well? I mean, JP Morgan aside, right?
Mhm.
They've called everyone back on September 21st, but are you seeing much activity around other people heading back into the office?
Not a whole lot. It was really interesting actually. I was talking to my wife this morning who does investment banking, and she said that some of the JP Morgan traders had been called back earlier, only to be now sent back home because of a coronavirus in the office. And I think that's kind of the risk that businesses are taking here. And that's why I think it's going to take a while for us to get that confidence back to go in offices. And now, even more so than ever, businesses are becoming accustomed to this new era, and telecommuting is likely to really surge. And so that could mean a permanent demand destruction of at least 5%, maybe even more than that. Maybe we don't get 10% of demand back. And it takes years for us to start building up our confidence to get back on planes, to get back on trains. And that's where kind of the dark clouds are forming for petroleum, is that the longer we remain in this era, the longer it's going to take us to get that confidence back, to go back to some sort of sense of normal.
Right. And so, since you focus on gas prices, petrol prices, what does that do if we don't recover that 10% in, say, commuter consumption or driver consumption? Putting even the jet fuel stuff aside, what does that do for overall, say, gasoline pricing in the US? Are we at a kind of a step lower than we've normally been, or do we still see, say, intermittent seasonal volatility where we go up to normal prices? What does that look like for the average consumer?
Well, Tony, I think it was back in 2015 at some point when OPEC opened the spigot up and oil prices were low. We all had this phrase, it was lower for longer.
Right.
And I think that's a phrase that maybe, kind of in a different use here, but that's what we may be looking at for both gasoline and distillate prices, lower for longer
Mm,
because of this very slow return of demand. And so I foresee that gasoline prices will struggle for quite some time, maybe a period of years, to get kind of back into where they normally would go. And it's because of this demand destruction that could stick around. I think most of this winter, motorists will be looking at prices under $2 a gallon, of course, barring the traditional high tax, high price states like California and Hawaii, where the sun is shining. And unfortunately, right now they have a lot of forest fires. But for everyone else, it's going to be a sub $2 a gallon winter, and next summer's probably going to be another good one. But the future next summer does get a little murky. If we do get some demand back, keep in mind that we're making a lot of permanent decisions today on the era we're in. That is, oil
right.
production has been shut down, drilling is offline, even some refineries in Europe are shutting down. And if we do get some sort of bounce, that could lead, the shutdowns today could lead to higher prices whenever we do turn that corner.
Supply side, yeah. So just for context, when you say sub $2 a gallon, how much is that off of normal prices? What are normal prices? Is it 2.50, $3?
It typically is. In the last few years, we've held remarkably stable, somewhere in the mid to upper $2 a gallon range nationally. So, very, very rarely, with the exception of, I believe, early 2016 and early 2015, have we seen the national average spend a considerable amount of time under $2.
So you're saying 30% off of what had been traditionally normal prices. Is that fair to say for the next maybe 12 months or something?
Yeah, I think 6 to 12 months and potentially beyond that. And the amazing thing about those prices is, before this, that would entice motorists to hit the road. Now, it's not really doing a whole lot.
Interesting. Okay. So Patrick, we got to end this on a high note, on a positive note. So what's the upside? If gasoline prices are 30% off of normal, but commuting is down, these sorts of things. Is there an upside? What are you telling your clients about this?
Well, the upside here potentially, and my clients are GasBuddy members, so we are looking at this a little bit differently, is that low prices are probably here to stick around. And I think given the situation, low prices will actually keep America using more petroleum than you think of, the early era, 2014, 2013, when motorists were really looking at Priuses, EVs. I
Mhm.
think that's going to really slow down given the environment of low prices, kind of incentivizing motorists not to ditch their fossil fuel cars at this point.
Interesting. Patrick, thanks so much for your time. I really appreciate it. This has been super insightful. Thanks again, and hope you can come back.
Thanks for having me, Tony.